Hello everyone, welcome back to my channel. So this video marks the wrap up of the week number 12 in this road to 200k challenge. Before we get to the actual content that I want to show you in this video, I have a small favor to ask you, and I'd like to get to know your feedback in this regard, because this week that just ended yesterday, Friday, was quite atypical, and because of that this video is going to be a little bit longer than it usually is. And so I'd like to get your opinion on this, because the way that things have been done over the past weeks of this challenge, when it comes to the weekend, I explain how the markets went over the week and what the trades that I did after Monday when the initial trades are posted. And so sometimes the video gets a little bit longer because I have to explain all the trades in one single video, and then we have to update the scoreboard accordingly. And so I would like to know your opinion about the following. If I do some trades over the week, be it on Tuesday, Wednesday, or even Thursday, would you prefer for me to post a small video explaining the trades that I did in that particular day, and of course explaining the reason why I did those trades? And so by doing that, the explanation about the trades and all that would be split across several days over the week, and then on the weekend I would be able to post a shorter video? Or would you prefer to have a longer wrap-up video, as has been the case up until this point, in which I explain all the trades that I did over the week and the rationale behind them, and then we update the scoreboard at the end? So leave in the comments, leave a comment below, tell me what your opinion is, because for me the purpose of these videos and why I'm posting this challenge is not only for my own accountability and to keep a sense of commitment, of course, to this objective, but also the purpose of these videos is just from an educational perspective, to also help you to see how these things can be done. And of course, if you want to embark in a similar journey, the purpose of this is also to show you that you can do the same, as long as you stay committed, disciplined in your strategy, and you develop an affinity with this kind of material. You can do the same yourself, and you can reach your own goals in your own way. And so for me, this is to inspire, this is to educate you, and also to help you to also reach your financial goals in this way. There are many other ways, but this is also another one. And so for me, it's important to make this material as digestible and as appealing to you as well. I know that many times people do not have like half an hour or 45 minutes during the weekend to spare so that they can watch the videos. So I would like to know your opinion on how can this be more useful to you, whether we can split the trades that I do on a specific day over the week, or I can do, as I've been doing so far, a longer wrap-up video, and so in which we explain all the trades that I did over the week, and then we update the scoreboard on the weekend with the overall understanding of where we stand, what were our profits, how far are we from our objectives, and all that. So leave a comment below, let me know what you think of this, and yeah, I'll take your comments into consideration in the following weeks moving forward. And so I'll be waiting for some feedback on your side. Now, for this video, and for the matter which is the most relevant here, which is this video, and what happened over the course of this past week. As I mentioned, this week was quite atypical And why is that? Because I had to do a lot more trades than I usually do, and for good reason, because markets performed quite well this week, I would say. There were some good signs coming out from some financial companies that posted their earnings, and so markets were encouraged by it. Also, because the ECB, the European Central Bank, lowered the interest rates, this also brings an extra momentum towards the path of keep lowering interest rates across the main central banks, and of course this also includes the Fed, the Federal Reserve, and so an additional incentive for the Federal Reserve to also lower their interest rates at the next meeting, at the next Fed meeting. And so because markets kept performing really well, I had to close a lot of positions, and of course when I close positions, meaning when I buy back puts that I sold initially, the collateral, the buying power gets released, and so I am able to sell more puts on another securities, on another stocks, and so I keep collecting more and more premiums about it. So what began as a quite normal Monday, it ended up being quite profitable as the week progressed. But the best way for me to show you is to show you the screen in which the trades are recorded, and as you can see, the trades of the entire week cannot be filled up in only one screen, because from this point onwards here, from this trade onwards, these are all trades that I had to do over the week. All right, and there are a few more in here. All right, as you can see, I had to do a lot, and then of course the options that expired. By the way, all the options that I had which matured by the time Friday night came about, they all expired worthless, so I did not have to buy anything. I was not assigned any shares at all, so all the puts that I still have left fell away, and the calls that expired yesterday also fell away worthless, so I did not have to sell anything. And so yeah, basically it was a quite good week, and so let me see. Yes, because I had, and as I can see here, yeah, so it starts in here on Tuesday, October the 15th. I had to buy back these American Airlines puts because the price of American Airlines went up significantly over this week, as you can see here, and because of that I was not forced, because you're not forced to do anything, but it made sense. As you can see, there was a gap up here on the next day, and so the puts that I sold expired worthless, the price came down to 1 cent, and so I bought them back, sold more puts on another securities. Basically, let me see which one it was. Yeah, I sold some puts on US Bancorp. Now keep in mind, I could not find any other suitable puts to sell, and I had to go against my initial strategy, which is avoiding any stocks that were due to release earnings this week. But I could not find any other reasonable options, and so I had to take the risk and sell some puts on Bancorp, and I also sold here a put on Carnival, the cruise company, even though it was a stock that I have not considered before. It has a quite cyclical business. It's not nearly as much quality as the US Bancorp, but I decided, all right, with the collateral that I have left, it makes sense to make this short-term bet on CCL. Also because the option chain on CCL is quite shallow, a bit similar to what happens with Ford Motor Company. And so this was also another point against making this trade. But at the end of the day, I decided, all right, it was a bit close. The strike of 21 was a bit close to the stock price, but I still decided to take the risk, and fortunately, everything went just fine. As this put ended up expiring worthless, as you can see right here, yesterday. So then on the next day, on Wednesday, because 4 motor company shares also went up, the puts came down to the price of 1 cent, so I decided to buy them back. And with this collateral, I decided to sell 1 put on SLOD. Again, no further options were available which were deemed worthwhile, and so I decided to use this collateral to sell 1 more put on SLOD. Even though the price was crashing down quite heavily by this point on SLOD, and so I decided, all right, let's try to sell this put at 87, because if it gets assigned, given the fact that our average price of SLOD is 97.75, buying a stock or 100 shares of SLOD at 87 would be able to bring down somewhat the average price of my holdings of SLOD. And also on the same day, as you can see, these puts that I sold on US Bancorp, I've sold 3 puts, but right on the next day, these puts went down to 1 cent. So in one day, the puts had a premium of 26, but because the stop rose very strongly, and this was just before earnings, so perhaps some investors had already some strong indication of what would happen when earnings would come. And so in one day, the premiums came down from 26 cents to 1 cent. So I decided to sell them. For some reason, I could not sell the 3. The third option, I had to keep it because it was not filled, but these 2 were, so I was able to buy them at 1 cent, and I used that to basically sell 1 more put on SLOD at 88, because the price in the meantime had rose a little bit, and I also took the opportunity to sell another put on Carnival company, and also because the American Airlines stock kept rising, the calls for the 13.50 call became available, and so I decided to go ahead and sell these calls at 2 cents, which would mean for each contract €2, you see, even though, of course, as I mentioned last week when I did this similar trade, I would still incur on a capital loss because the average price is 13.72, but given the premiums that I already collected in the meantime, as you can see right here, by selling at 13.50, I would still have a profit overall. A capital loss, but an overall profit, all right? And so basically this was a situation by Wednesday at the end of the trading day. On the next day, on Thursday, these puts that I had initially sold on Lyft on Monday, they came down to 1 cent, so I decided to buy them back. And because the price of SLOD, the stock price came down again a little bit, I sold 2 more puts with an 87 strike price, all right? And then the next day I was able to sell the remaining puts that I had on the US Bancorp. I believe it was either on Thursday or on Friday that they released the earnings. I believe it was on Thursday, if I'm not mistaken. And so because of that, I remember that when the earnings were released, the price again shoot up. In this case was not that usual occurrence. The price actually went up by around 2%, and so this put that was still remaining simply came down to 1 cent, and so I was able to buy them back because there were also no other opportunities available. I did not have enough collateral to sell more puts on SLOD, and I did not want to keep selling puts on Carnival Company. I decided to go for an old friend, which is an old friend, so to speak, selling 2 more puts on Pfizer. Again, a risky move, not because of the earnings, because as far as I can remember, Pfizer was not yet with earnings on their calendar. No, it's not. But because the price was the price of the stock was very close to the strike of $29. But then the probability of profit, meaning the puts expiring worthless, was around 82%, and we were only 2 days away from the expiration date. So I decided it was worth taking that risk, and even if I was assigned, it was a good call. It is a good quality stock nonetheless. So yeah, I decided to take the gamble. But as you can see here, the Pfizer share puts ended up expiring worthless. So the price, the stock price, did not reach the strike, and so it's all good and everything went well. And now this was yesterday, and again, interestingly, I thought at the beginning of the day that this would be over. I would not make any more trades because it would not be necessary to do trades on Friday, but I ended up doing it. And why is that? Because the situation was, if you recall, I had sold 9 calls here expiring yesterday, all right, on American Airlines. But the fact was that the stock price of American Airlines kept rising, and as a result, the calls expiring on the next week, on October the 25th, became available. The calls with a strike of 14. The calls with a strike of 14. Now, this call would already allow me to bag a capital gain, all right, notwithstanding, of course, the premiums that I already received. But because this particular call became available for next week, I decided, all right, this is exactly what I was looking for. And so, because as the price continued to go up, these calls became almost worthless at 1 cent. So I decided to buy them all back, even though they would expire that particular day, because there is also a possibility that if the stock price comes down on Monday in the early in the session, this call would stop becoming available, and so, or the premium would come down by a lot. And so I decided not to take any chances. I bought back these calls, and then I used the 900 shares again as a collateral to sell another calls, 900 shares, meaning 9 contracts, to basically try to sell them at 14, which of course would be an ideal scenario for us. And because the Lyft stock became also continued to go up, the calls also for the next week with a strike price of 14.50 became available. And for the same reason, I decided not to wait for Monday, because the stock price can come down. And so I went ahead and sold 5 calls of Lyft with a strike price of 14.50, which is exactly our acquisition price. And so this was exactly what I was looking for. And now we'll have to wait and see what happens, and that is why I still have in my portfolio these calls on American Airlines and on Lyft. At the moment, as you can see, because the price continued to went up, these calls continue to rise in value. So even though I'm having an unrealized loss in here, but it's irrelevant, because for me, as long as I reach the strike in here, all right, I will have a capital gain, right? And so for me, it's good enough. And in here, as long as the stock price reaches the 14.50, I will break even on capital, and I will still have as a profit the premiums that I've collected over time. And so this is a very, very good scenario for me. The fact that I'm in an unrealized loss. The only implication is that if I want to buy back these calls, I would have to incur in a loss, but I'm not gonna buy them back unless the price, the premium of these calls come down to almost zero, or it comes to a point in which the stock will not, by all likelihood, will not reach the target price, that the target strike, and the same options for the next week become available, for the following week become available, and then I will simply roll over the trade, and so I would have to buy those back and sell the puts for the following week. So that would be the only circumstance in which this unrealized loss would become relevant, because for the time being it is completely irrelevant. And so this is how the week went, and as I mentioned before, the remaining contracts that I had, all those puts and the calls that I had on Estilo, they expire worthless. And yeah, this is it. Now it's about time to go to our scoreboard and register all the trades that we input since the last Tuesday, meaning October the 15th. And so we'll start here. We bought back these American Airlines puts. So let's see where the trades are. Yeah, they're exactly in here. So basically I bought these back on the next day, exactly on the next day. So this was on October the 15th, right here, and I bought them back at 1 cent. Let's see what is the commission. I paid $3.03. So here, 3 cents, right? And this trade was closed. And even though, of course, the result was not that big, but the return is great, because this was only within 1 day, this return. So it's always good. So the next one, because this one is done, right? And now for the remaining of the trades on Tuesday, let's input this put on CCL. So let's push this down, copy here. This has a formula, so it's okay. So CCL here, this was a cash covered put. The strike price was 21. It was one contract. Let's see what was the premium, and the premium was 11, and the fees were 106. So 11 and 106. And as I showed already, this one expired worthless, so nothing happened for some reason. Yeah, I forgot to put in here the date of expiration here. And as you can see, not that big of a return, but still a good one, given the fact that, all right, it took 3 days, and this was something that came from a rollover, and so it's always an extra return for us. Also continue here to put additional trades. So yeah, the 3 puts on on US Bancorp with 21 cents. So the fees were 141, and this is 212. So here, just not forget 212. This was 27, I believe. If I'm not mistaken, this was 27, actually 26. Right, so 26 here. Expired in here. This is US Bancorp. This is a cash covered put with a strike price of 46, and these were 3 contracts. Because this trade was closed later on, I'm going to leave it as it is. All right, and so this is done for the Tuesday trades. For Wednesday, as you can see, I bought back these 4 motor company puts. So let's close them. Let's put in here the 16th, and I bought these back at 1 cent. Let's see what the commissions were. The commissions were 53 cents, which is quite good given the fact that those were 10 contracts. 53, and this trade was closed. And this is also a very good return. As you can see here, it took place over 2 days. And I used this collateral to sell one more put on STLOD. Alright. So let's drag this one in here. We also know that the puts from STLOD, they all expire worthless, right? So STLOD, this was a cash covered put, the strike price was 87, this was only one contract. And let's see, the premium was 30 cents and the fees were 26 cents. So 36, 56, this expired worthless. And this was also a very good return. As you can see, 62% annualized, which is quite nice. The next one, so, and again, we sold the previous day these US Bancorp puts. We managed to buy back 2 of them the next day at 1 cent with fees of 1.11. All right, so probably the best way for to do this, I'm going to add here another row. Let's copy this, right? And the reason for me to do this is because I want to split this to 1. We know that this one, the premiums were the same, right? So, but this US Bancorp, let's just pretend that's all right. This is 141 and 71, so here was 141 and this was 0.71. This is simpler to do the math, all right? And now we can do this the next day here, because these ones were bought back. I believe it was 111 if I'm not mistaken. Let me see. Yeah, this was at 111 here, and the trade was closed. And of course, given the fact that it was a 1-day trade, a return of 188% is very, very, very handsome. Yeah, because of the circumstances at which this took place. Yeah, I think this is it. All right, so moving again forward. All right, so we are not finished for Wednesday. We still have more trades to input. This American Airlines call also took place. All right, so again here, this one here, this is also here. Yeah, so American Airlines, this was a covered call. The strike price was 13.5, right? These were 9 contracts. I will adjust this later on, or perhaps I can do it right now. Let me see if I can find a covered call for American Airlines. Oh, it's quite easy. We can filter out here, and this is a covered call. Because by doing so, I can copy the formula, right, and do this. All right, this is done. Let's take the filters out. All right. So now this is done. and we sold these calls at 2 cents. Let me see what was the, yeah, this was here, was 275, and we know that we bought back these at the price of so a credit of 3 cents, 51, so this is 48, so we paid in total 48. This was closed. Of course, it's a lower return, a much lower return, because the initial premium was so low. But yeah, it happens when the stock price is so distant from the strike price that we want. So there is no way around it. It is what it is. Moving on again, we still have these last two, which is basically the Carnival company and the SLOD. So let's start by the Carnival company. So here, this, and we know that both of these put options also expired worthless. All right, so CCL, SLOD, both of these were cash covered puts. The strike price here was 81. If I'm not mistaken, this strike price was 88. Indeed, it was 88. The premiums were 9 cents and 21 cents. It was 1 and 1. 9 cents and 21 cents. And the commissions were 75 cents and 191. And we know that these expire worthless, so expired. Again, the annualized returns were pretty good, especially in the case of the Carnival company, not so much in the case of SLOD, given of course the size of the collateral, but still those were pretty good trades, given the fact that they came out from a rollover and reusing the collateral, which is always nice. Again, for the following day, on Thursday, we bought back the 15 puts on lift at 1 cent with the fees of 4.54, and so at 4.54, and we buy them back here. As you can see here, let's see, put in here, let's copy this in here, because this expired on the 17th, and again 50% return, which is quite good. And then we use the collateral to sell 2 more puts on SLOD on the 17th. Let's push this a little bit back. Now here, push this here, and we know that this SLOD puts expire worthless, so it's a cash covered put. The strike price is 87. 2 contracts, and let's see here, 25 cents. We actually had a credit of 19. You can never say this enough, but having a credit is always very nice. And this expired worthless. And again, because it was a 1-day return, given the puts were sold on Friday, on Thursday, this was a 105% return annualized, which is always super good. This is not your average checking account return, or savings account rather. The next day we finally managed to buy back this put on US Bancor with a fee of 105, and this is it here, 105. We close the position, and again 92% return. As you can see here, this was a 92% return. Very, very handsome indeed. And so we use this to sell 2 more contracts, this time on Pfizer, right? We might as well copy all of this again, because the formula is the same. This is Pfizer cash covered put, the strike price 29, 2 contracts, and at this point the premium was 4 cents with a fee of 109. The premium is low, but keep in mind this was the day before the expiration, so it's normal. It's normal that the premium are so low, and even though with a $6.91 return, it was still a return of 43.5%, because it was only a 1-day trade. Completely understandable. And now we reach Friday, as you can see here, and so this is the deal we done, which was, I think, a very good one, especially as the call with the strike price of 14 became available. So we are already closed this trade. So now on the 18th we can do this. Actually here this is wrong, right? Because these puts expire on the 25th, and these are American Airlines calls, covered call. Strike price is 14, 9 contracts. Again, let's copy this formula here, because this is the actual collateral of this stock. Again, this premium here was 17 cents, and we paid 6.27 for it. So 17 cents, and we paid 6.27 for it, right? And we'll have to wait and see what's going to happen with this one. And again, let's do the same thing with the lift contracts here, which were also sold. Let's copy this. This is the same. This is lift. It's a covered call. Strike price. So strike price 14.50. These are 5 contracts. Again, we need to bring back the collateral, right? This is also useful, I think, for you guys, because by doing so you'll be able to probably be able to do actually this collateral is the same because the price of acquisition is the same. All right, so we don't need to do this, but this is also good for you guys in case you want to create a similar file for your trades, because this also helps to keep you the record of your trades, which is always useful, so that you know how you are getting, what your performance is, and how can you improve these, which is always nice. So the premium was 11 cents here, and here we're gonna have to sum all the fees. So in here we have 141, 181, here you have 252. Yeah, because basically this is 181, 141. This is also 140. This is 142. So 283 and 283, 323. All right, and these will expire next week. As you can see here, and just for you to have an idea, these were actually, yeah, these were the profits. The account is not complete because I still have to close a few cells here, but not a problem. Let's just copy this in here, because the rest here, as you can see, is still the call expired here, worthless, so we are closing here the contract. All right, it's expired. And here, of course, this is a very, very high return on absolute terms, even though the annualized return is only, quote unquote, only 70%, but still is very good. The BBWI puts also expired, worthless, as you can see right here. So again, here expired, worthless, which also tells you it's a return of 52%, also good. And again, I guess all those trades are closed. The Pfizer's are closed. The other SOD puts are also closed, and the CCL were also as well. So everything is done. And so as you can see, we still managed to accrue a return for the week of 1,010 euros 0.95, discounting already all the fees and commissions. So this is net of commissions and fees, which is quite good. And we have a total realized gain of just a tad above 12,500 dollars. So this is quite good. This is quite good. And we also have a few more things to do here, which is basically we need to account also for this is a SOD, which is also accounting already for these ones, but we still have something more to do because we sold more calls. These calls, the return on these calls need to be added above to the American Airlines, all right, because this will lower the break-even price for us, the break-even which we have to sell. So I'm going to add here another parcel which goes right here. The American Airlines calls are here, right? And in here we also have to do the same. We are already dividing by the amount of contracts that each entry has. All right, so here we have it in here. So you can see, yeah, it was not that significant. This will remain at 13.42, and this was 1 cent below, so nothing really relevant because this was a very, very low return. However, we're going to need to do another thing, which is here we're going to have to add again, and this will be the return of American Airlines for the coming week, which of course is going to be a value because it's empty. That cell does not have anything, but still, when the time comes for us to see how much profit we got from this trade, this will come back, and the values will not be error anymore. It will give you the actual value. So this is it, as you can see. And we also have to look for the entry on lift, which is right here, because now we need to add the value of the new calls that we sold, which is going to be right here. And yeah, this is all. This is done. It remains to be seen how much are we able to gather from these trades. But for the time being, this is all. As I mentioned, this was a very, very active week. The video ended up being a little bit longer than usual, but please leave a comments below. Let me know what you think of my proposal, whether it's be better for us to split the trades that are going to take place during the week over several videos, as they are done over a specific day, or if you prefer to do it in the current format, which is basically explaining everything, all the trades and rationale, and updating the scoreboard at the end of the week. If you have any suggestions and or comments, leave it in the comment section below. Also, feel free to like the video and subscribe. I'm also available on LinkedIn in case you need to ask me anything through a private message. And yeah, we'll reconvene on Monday to start the week number 13. And yeah, it's gonna be an interesting one because more earnings will be coming, and yeah, you never know what's gonna happen. Usually stocks tend to come down after earnings are released, when any tiny detail is not to the liking of investors, but we'll have to see what happens. Yeah, I'll see you all next Monday.